We're going to start this hour with that breaking news on the economy. It's news that could have big impacts on your wallet.
The Federal Reserve just announced it is holding interest rates steady for a full year now. The benchmark rate has remained at a 23-year high, but the Fed is hinting more than ever that a cut could be coming soon, just not today. Joining us now with the very latest is NBC News business and data correspondent Brian Cheung. So, Brian, this is not a major surprise, right? You have been sitting here telling us for months that an interest rate might happen in September. I don't think you ever said in July. Is that still the thinking?
Yeah, and by the way, that next meeting is going to be the next time we'll get a decision. So it seems like, yeah, it might not be long from now that we'll get that interest rate cut. But again, on the calendar, we're going to be looking at least another 6 to 8 weeks to get that. Now, when it comes to the announcement that just dropped about 2 minutes ago, the Federal Reserve saying that it has not has not cut interest rates. It's keeping interest rates where they are right now, but that they've seen some signs of progress. So I'll read you exactly what they said. Quote, in recent months, there has been some further progress towards the committee's 2% inflation objective. And the reason why I bring that up is because that's been the big story in this economy, the high price tags that we've all been noticing at the store. Now, the Federal Reserve has said, all right, well, with the rate of inflation coming down to somewhere closer to around 3% as of some recent measures, again, compare that to about 9% in the peak of the summer of 2022, that is good progress. But the Federal Reserve has been saying, why has inflation been going sideways? It's been seemingly hovering around 3% for basically the entirety of 2024. There have been other readings that have been more encouraging to them. This statement that they just released seems to codify that. But again, they're saying very clearly that the committee does not expect it will be appropriate to reduce the target range, aka a cut, until it has gained greater confidence. Can they get that by September? That's what we're going to be watching for, not just in the coming weeks, but in just about a half hour when we hear from the Federal Reserve Chairman in a press conference.
And Brian, beyond the Fed, for consumers, assuming a cut does come in the fall in September, what should we be preparing for when it comes to our savings and some of those big expenses like cars and homes?
Yeah, well, that would be a pretty substantial change because interest rates haven't been changed by the Federal Reserve in about the last year or so. So when we're talking about what we need to be aware of, savings is going to be a big story here because we've been getting pretty decent savings rates in terms of certificate of deposits. If you're willing to keep your money at the bank for 12 or 18 months, you've been getting rates somewhere around 5%. But if the Federal Reserve cuts interest rates, the banks, which usually like to change the rates that they pay out on those deposits based off of what the Federal Reserve is doing, that could go down. So you might get less savings on those types of accounts if you do wait until September. So one advice based off of some financial experts that we've been talking to so far is before you get to that September point in time, make sure that you're putting money in perhaps some of those certificates of deposits, again, those 12 to 18 months that might be yielding 4 or 5%.
Brian Cheung with the latest. Thank you.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.